News today is, of course, the GST Council meeting that begins today, and the rejig in the rates is expected to drive a surge in consumption. Now, to understand the impact of the proposed cuts and also to understand how tariffs will impact banks and others such segments, our colleague Ritu caught up with Ashwini Kumar Tewari, the Managing Director of Corporate Banking and Subsidiaries at State Bank of India. Listen in to that conversation.
We see a lot of positivity, especially on the retail side with the GST cut. We hope a lot of cars will get sold and a lot of other personal goods will get sold, leading to demand for personal loans, etc. So good possibilities of credit growth going forward.
Well, while that may be the case, Mr. Tewari, but in the second quarter, as spending gets delayed in anticipation of newer, lower rates that are yet to come, do you see some temporary impact in the second quarter growth numbers, as people wait for these cuts to happen and perhaps delay their spending until then?
So some waiting may be happening, especially on the large tickets like auto, etc. But what we are not seeing any changes in the mortgage portfolio, which continues to do well. The credit growth is fine. Overall, we see no impact, significant impact on our loan growth. There may be some individual segments here and there which might be. So for us, mortgage is doing well. SME continues to do very, very well. Last several quarters, it has posted growth rates of above 15%. So overall, we see no impact of this anticipation of GST cuts so far. Whatever it's happening is to the localized industry level, maybe there is some impact on sales.
All right. Even the recent GDP numbers, we've been positively surprised with the 7.8% print. From SBI's vantage point, does this feel broad-based on the ground as well? I mean, where are you seeing actual green shoots?
So see, part of this, while this is a very good number and it probably beat a lot of expectations on the upside, part of the reason also is some front loading of exports, etc., which got done because in anticipation of the incoming tariffs and all. How much of that is, we will know only when more details emerge. But on the ground, as I said, we see the credit growth steady. We are not seeing any spurts either on the upside or any downward trends, etc. We see a steady thing. On the capex side from corporates also, we are now seeing a lot more intent, more importantly, more proposals. And as I think in the first quarter earnings call, we had given out a pipeline number of 5 lakh crores, including sanctions and those under discussions. And we are seeing a lot of that getting converted now also. So I don't see a lot of either up or down movement as far as our book goes.
Mr. Tewari, just to reconfirm, the pipeline figure for these corporate loans that you had given us earlier, was that 5 lakh crores or 7.2 lakh crores was the total figure, as we understand?
So the 7.2 lakh crores was 3.45 or 3.4, that number was the under discussion. And the remaining is both unutilized credit limits, which I had not mentioned now. So the remaining portion is the sanctioned but not utilized working capital limits.
Okay, got that. Let me quickly come to the flip side. With the higher US tariffs on India and the narrative adding a lot of uncertainty, what could be the impact on your bank? Which borrower segments are you going to be more watchful of? And how exposed is SBI's loan book to the industries that will get affected because of these higher tariffs?
So we have done an analysis. Well, I can't give you exact numbers, but the overall impact on our book is not significant. There are some units in the industries which are more impacted. For example, we know all these industries, these gems and jewelry, the seafood, especially shrimp. We have the textiles industry, we have engineering goods, we have some specialty chemicals. So 5-6 industries are the major ones impacted. So while we have exposure to some units in each of these, but the overall impact on our book is not significant. One other thing is that many of these exporters are cash rich and have not been borrowing heavily, even if they have lines available. So on balance, we don't see too much of impact on our book directly. On the second order effects, if any, we will have to evaluate that and as we go forward.
Mr. Tewari, when you say it's not significant, your exposure, should we assume it is less than 10% in single digits?
No, we can't give you a number, but it is quite less compared to the overall book size which we have. It's not significant in any significant manner. And many of those who we are talking to are also... Sorry, many of those who we are talking to each of these large players especially, they are also looking to diversify, looking to get alternate places. Many of them already have some setup either in the Middle East or in other Asian countries from where they look to supply. So they are trying to find ways in which to lessen the impact of the tariff as well.
But you just sum up this credit growth conversation, sir, with the tariff impact, investment decisions getting delayed, all of that, and your own corporate loan book, growing in single digits in the previous quarter. How soon do you expect to get back to double-digit credit growth? And do you retain that overall credit growth guidance of 12 to 13% for the fiscal, or could that be slightly lower?
So 12 to 13% is we still retain that. I mean, unless something goes drastically wrong, in which case it could come down a little. I mean, you are aware that the last quarter numbers for all scheduled commercial banks is somewhere in the range of 10.5%. So that has come down on an industry level. But we retain the guidance, and the reason for that is that on the retail side, we continue to see strong growth, and we are focusing now also on the personal loans, which have not been grown well.
India's largest lender retaining their credit growth guidance of 12 to 13% for this year. Absolutely directionless on the index right now, and a less than 100-point range is where the Nifty is, still hovering between that 24,550 to 24,650 range in today's trading session. Take a short break, put the spotlight on the crypto markets on the other side with Manisha Gupta.